Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 19th of August, 2018, and we're asking the question, what will it take to cause silver prices to rise again? On Tuesday, the 24th of April, 2018, Reuters reported the following comments from CPM Group. Quote, "The price of silver will depend heavily on trends in investment demand in 2018, but could get a boost from international political and economic risk purchases." Unquote. Now, just to remind you who CPM Group are. They're based in New York and are a commodities research, consulting, financial advisory, and commodities management firm, providing independent research, analysis, and advisory services. In other words, this organization essentially supplies data to the industry at a cost. For example, they charge $160 for a copy of their own annual silver survey, which incidentally quotes, "The enormous range of economic, financial, and political issues facing the world and individual investors seem more likely to lead to a rekindling of silver demand from investors." Unquote. So let's take a reality check here for a moment. Average silver prices declined 0.5% in 2017, and so far this year they are down 14%, or $2.40 an ounce, as investors pursue higher yielding opportunities, including global equities. As we have quoted in other videos, silver investment demand dropped 52% in 2017 to 50.2 million ounces. CPM Group expects 43.9 million ounces in investment during 2018, the lowest since 2006, when investors added just 30.6 million ounces to holdings. Their report also quotes, "On various occasions over the past few years, silver prices have risen only to fall back. This sort of price pattern often turns investors away, putting them in a cautionary wait-and-see frame of mind. Though geopolitical issues, including looming US-Russia and US-China tensions, may stimulate investor safe haven interest, they may not buy aggressively. While there is a lot of silver available in the world compared to gold, and unlike gold, silver tends to be liquidated from inventories more readily, there has been a decline in mine supply since 2016, which is expected to continue over the next decade. Declining mine supply and rising fabrication demand are expected to tighten the market. This could lead to an increase in prices." Unquote. But despite this latter comment, they admit that while solar panel demand will rise this year, probably by around 1.2%, this in itself will not be sufficient to affect prices. Well, this sounds slightly positive, does it not? But perhaps a little pedestrian. So what is the catalyst that is likely to push up silver prices in the very near future? Now, we ask you to bear with us on this video. We have listeners who are new to silver purchasing, stacking, or investing, and we have listeners who have been involved for many years and trade daily in this market. But to keep this video simple and frankly easy to digest, we confine future silver price growth to essentially be determined by three factors. One, the continuing deficit in supply versus demand. Two, increase in industrial usage. And three, increase in purchases for investment or speculative purposes. Let's deal with each of these briefly in turn. First, the continuing deficit in physical supply versus demand. Since 2011, the actual physical deficit, that which has been mined and recycled versus that which has been demanded by investors and industry, amounts to a deficit of approximately 281 million ounces, or an average of 40 million ounces per annum. Now, if we add in inventory build and net investment build, this deficit increases to a deficit of 655 million ounces, or 93 million ounces per annum. Now, if we assume there is approximately 2 billion ounces of above-ground silver to mop up these deficits, then there is sufficient for the next 26 to 50 years, not allowing for new discoveries or a decline of existing ones. So just hold on to that thought. 2. Increase in industrial usage. Well, since 2011, industrial demand has moved from between 50 to 60% of total demand and 55 to 61% of total supply. However, we have seen the actual demand figures decrease from 661 million ounces in 2011 to 599 million ounces in 2017, which was up a little compared with the previous 3 years, admittedly. So where is this industrial demand going to come from? Just hold on to that thought. And 3, increased demand for investment or speculative purposes. Well, in terms of physical coin and bar demand, since 2011, we have seen demand fall from 212 million ounces in 2011 to just 151 million ounces in 2017. So just hold on to that thought for a moment. So, despite what CPM Group stated, we seem to have a situation that frankly does not look very bright on the surface. We have enough silver above ground to last anywhere from 26 to 50 years, subject to current supply and demand levels. We have industrial usage falling in real terms, and which may be even further affected if we enter into tariff territory and trade wars. And we have a general public and investment community just not interested in buying silver for monetary or investment purposes. And yet, we see all over YouTube pumpers cry, silver prices are going to the moon. The question we all must ask ourselves is how? Well, before we answer that, we shall depress you a little further. We also have a rising dollar value, and as silver is internationally priced in US dollars, this too has a downward effect on price. So, before you run off and throw yourself into the next passing car or jump off that bridge nearby, we're going to address the options as to how prices are going to rise. But first, let's listen to what other people suggest. 1. We hear some people cry, get rid of the manipulation and the prices will skyrocket. Well, why would it? Physical supply and demand is pretty much on parity, or is mopped up by above-ground stocks. And most companies have all-in sustaining costs either at or below current price levels. So why is there a need to jack up prices? In fact, any price increase is likely to result in miners developing more seams, or perhaps those seams which are currently uneconomic, thereby increasing supply and thus having a downward pressure on prices again. 2. Well, the world's economy is growing and industrial usage will cause prices to rise. Really? Well, they haven't over the past 7 years. And frankly, we have already mentioned that the increase in solar demand is very unlikely to influence price. Yes, there are advances in medicine and refrigerator purchases from emerging and Far Eastern markets such as China. However, we are already witnessing that world trade is in flux because of the imposition of tariffs and the threat of more. And emerging markets are suffering major currency crises, so they are unlikely to increase demand anytime soon. 3. Okay. Option 3. Investors will invest. Why should they? They have equity markets which are still rip-roaring ahead. We have interest rates slowly going up, so bonds or interest-bearing investments will become more attractive. And there is also the flavors of the year, such as cryptocurrencies, in which to make a serious speculative buck, especially as their prices have fallen back recently. So what is the answer? Well, it depends on your time frame. If you are looking over the next 20 years, then frankly you are relying on gradual stock depletion of above ground stocks, and the consequent rise in silver prices. So in our view, if you are aged between 20 to 50 and can hold on for that period of time, regular accumulation could prove a most attractive pension opportunity, providing, of course, you will have a large enough safe to keep it in. However, short term, there is only one remedy made up of two parts, namely fear and panic. We need something that will suck the monies out of the equity markets and into a safe haven investment such as gold and silver. But not only that, whatever happens, those monies must not go into the US dollar, as we have seen recently with the Turkish crisis, but into gold and silver. Well, here are some of the remedies we have come up with. 1. A serious military conflict involving the United States, and the more serious, the better. 2. A major banking or financial services default, such as witnessed in 2008, but on a much larger scale, where the contagion spreads throughout the whole industrialized world. 3. A crisis in the support of the US dollar, which could be geopolitical, commercial, as mentioned above, or possibly domestic political. For example, the uncertainty that would be caused, say, if President Trump was impeached, though this would only have a short-term effect. And 4, our proverbial black swan, something none of us have thought of. The bottom line is something that will panic the traders and investors, causing both the physical demand for gold and silver to rise, but also, and the conspiracy theorists and manipulator accusers will love this, also cause the speculators on Wall Street and the COMEX to paper trade silver. Yes, paper trade silver via calls and call options, causing its price to rise dramatically. Now, will these things happen? They might. But can you see why the gold and silver pumpers are constantly spreading the fear of an imminent market collapse, dollar collapse, or impending war? As essentially, it is one of these factors during the next few years or so that will cause silver prices to rise well above what normal trading conditions will allow. This is why we have continually reinforced our message for those who purchase silver for capital appreciation to do so with the longer term in mind. If any of the events occur as mentioned above, and prices rise sharply, then that's an economic bonus. And if they do not, then you will have preserved your wealth, while the fiat currency will have depleted over those years. We hope you have found this food for thought. Of course, you can disagree with us. By all means, please share your views on what you believe it will take to turn the silver market around. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on Twitter. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com. And if you haven't already done so, please subscribe as a free member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views